Welcome out to the Trading Justice podcast. I'm joined with my brother Matt. This is Mark Justice from Tackle Trading. Justice Brothers breaking down what's going to be a really interesting week in the market. As a trader, I'm looking forward to this week. It's going to be a lot of activity. We'll see if we get some nice setups. We'll talk about those in a second. But we got a big podcast prepared for you. We got Fed meeting this week. We have earnings season full way. We got a lot of interesting AI news to break down. We'll start off the podcast as we often do, giving a technical backdrop. Technical analysis is one of those things we do very, very well at Tackle Trading. We have our foundational class this Monday and Tuesday, where we are laying down that foundation, talk about technical analysis, talking about options. It is an absolute boot camp in every sense of the word for intermediate traders to catch up on the essence of trading. Matt, you've done a good job constructing it. Talk about that before I start poking your brain on technicals.
Yeah, we got the once a month class that we teach, obviously, every single month at Tackle Trading. It's a foundational class. It's called Master Trader. There's an awesome on-demand that comes with it as well. And if you're interested, you can come check it out on Monday and Tuesday this week, January 27th, 28th. It's a live course starting at 6 p.m. Eastern Standard Time for the pro members. So all you have to do is become a pro member. Sign up for a free trial in the link below and come test out one of the best classes you'll ever get for free.
Yeah, listen, Matt, this is going to be a big week. We're going to break it down top to bottom. And the amount of opportunities we get as traders this week, looking at technicals probably depends on the setup. Boy, I know you talked about this in the newsletter, but just from a trader 101 perspective, when you run this far, this fast, you like a few day pause. It sets up the next pattern. Talk about that.
Yeah, it's the combination of a couple things. And in the newsletter yesterday, I did call for a secondary pattern, a little bit of secondary development. And quite frankly, when you're looking at the market, you can't just talk about the market this week and really understand the story. It really starts from when the bulls really start inserting their willpower on the market. And that goes back a couple weeks to the fake out we had of the 580 level. A fake out is when the market tests underneath the support level, comes right back up and finishes above the support level. And what it tells us traders and what it tells the market in general is the market doesn't have that much fear if it can only last a couple hours underneath the major support level. And then the following day, you had this hammer candle on the market. And when you had this nice little hammer candle, it really signified that the bulls were kind of coming back in, showing a little bit of increasing demand. And from that point on, from the hammer candle following the fake down, you had this bullish momentum environment where the bulls just started picking up and picking up and picking up. And it wasn't just the fake out. The fake out really just gave the bulls some approval to start going ahead with with bullish activity. But it was really kind of the news that came along with that as well. You had the kickstart to earnings season. You had the second week of earnings season that was fairly good. You had the announcement of obviously the Stargate project that, kind of reignited the AI trade to a certain extent. So you've had some positive news along the way. And probably most importantly, Stargate was a major announcement, no doubt. Earnings has been really good. Best earnings season we've had so far, really kind of in the last 3.5 years, I would say. And so you've had a really good kickstart to earnings. You've had some secondary analysis that kind of created some themes with the announcement of Stargate. But you haven't really seen that secondary development. And so these news stories, along with the momentum that the bulls have created in the last couple of weeks, what I would define as a slightly overextended situation. And so when you think about slightly overextended situations, you're really only talking about at the top level of a singular move in the market where you're expecting a little bit of profit taking, you're expecting a little bit of and I do mean a little bit. I'm not talking weeks of consolidation here, Mark. I was talking days of consolidation, allowing the 90 EMA to catch up. And it just goes in kind of line with kind of where the major news of this week is coming, which is happening on, Tuesday night, Wednesday, Thursday of this week. And so I just felt like we were in front of some really important news stories coming out in 3 or 4 days from now. You're slightly overextended from an indicator perspective, both potential average yield, which you've ran 35 points in this current move, The previous moves you ran 31 points, 21 points, 25 points. And so you've ran further than what has been accustomed in the market recently. You can kind of see it in my boxes here. You get a 21 point move, a little bit of a move, a little bit of a move. This one's a little bit more expanded because of the fake out, because of the momentum, and because of the stories. And so you have this slightly overextended from a potential average yield perspective. You look at RSI, for example, a traditional indicator, and even though it's not in that traditional above 70 territory, you have elevated quite a bit recently. And now you're coming into major resistance at that 608, 609, 610 level. So the combination of at major resistance, overextended from a potential average yield perspective, and in front of 3 or 4 major catalyst type events this week, I thought it was fairly easy to call for some consolidation in front of that.
Yeah, and I'm a narrative trader. Anyone in my Cash Flow Vikings trading lab or tackle trade general knows I like narratives, I like themes, I like storylines, and then I like matching technicals to them. Price action has made sense the last couple of weeks for me. Bears loaded up, you got down, you broke down, and then we had that hammer candle on the futures a couple of weeks ago. And, all right, Armageddon, we know this. When bears get really frisky and you put in that big hammer candle, well, that can start some momentum. Shorts cover all of that. But then we just had a good week of news, right? You started off with the Trump inauguration. It hasn't been terribly complex to understand. Negative momentum, Armageddon avoided, and then a batch of good news. Started off with bank earnings. That earnings theme carried through. The Trump inauguration had some positive vibes to it, right? All of that deregulation and Trump, loves the market type vibes.
Don't discount no aggressive tariff announcement.
You're stealing my thunder.
I'm sorry.
You're stealing my thunder. And part of that positive vibes at the start of the week was a much lighter approach. There were no direct executive orders on tariffs to start the week. And as the week progressed, you heard a softer Trump, particularly to China, right? Particularly to China. Let me be blunt. Go to war with Panama, go to war with Greenland, play tough with Canada and Mexico. But if you're soft on China, market's going to love that. Market is going to love that. And, he was on an interview with Hannity and said, I would prefer not 60%, what he said pre-election, not 50, not 40, not 30. I'm going to be the infomercial. Give me a deal right now. He said, I'd prefer no tariffs, if at all possible.
It looks like he's negotiating publicly, which is part of the tariff conversation when it comes to President Trump. And so I'm right there with you. When you're looking at some of the news stories that did come out that was positive over the last couple of weeks, one of them was the lack of tariffs announcement. And now you're talking 25% tariffs. And I think the deadline is not the deadline, but the date they're kind of looking at is February 1st on the tariff announcement. And from what it looks like, and I think you got to take President Trump at his word right now, what it looks like is 25% on tariffs on Canada, 25% tariffs on Mexico, and it kind of looked like 10% on China, but that was a hypothetical. It didn't seem like he had made his mind up yet on the tariffs, specifically on China. It felt pretty solidified on the tariffs on Mexico and Canada. But I like you were being blunt. I want to be clear on the tariff conversation. The tariff conversation, part of that is priced into the marketplace. And so a little bit of an alleviation event, I would say, specifically on the Chinese news regarding tariffs.
One might argue that
there was anticipation of much more aggressive tariffs on China.
One might argue that the broad consolidation that we've seen for a couple months have been influenced by that pricing in of like, all right, we know Trump's coming into office.
But we didn't know the variable of the tariffs.
We did not know the variable because make no mistake,
a lot of other things, but you didn't know the variable.
Aggressive tariffs are not good for the market. They're not. They cause volatility, but they can handle some, right?
Well, it's because tariffs by themselves is not a net negative. That like sometimes when we have the tariff conversation, it's automatically assumed that there is tariffs equals a net negative. because we've been in free trade agreements for, quite frankly, decades and decades. But the reality is targeted tariffs, when you're targeting a specific industry to come back to America, or you want American businesses to be focusing on developing in America, or you want to impact some degree of foreign trade policy, tariffs can be a tool used to impact trade policy. And so I don't want to come across as just all market hates all tariffs. That I don't think that's the case.
It's not true.
The market hates broad-based tariffs. Targeted tariffs are a different conversation.
The universal tariff. Yeah, and on the universal tariff, Trump specifically was asked that by a reporter at one point this week, and he said maybe down the road it's off the table for now. No universal. This was a positive week under anybody's standards on the tariff. And heck, I haven't even mentioned Stargate yet, which we'll talk about more later on in this podcast. Right? It's positive. It was a positive flow, man. Just give me a J Powell.
The combination of the fake out plus the positive impact of Stargate earnings season, couple that with a environment on tariffs where the market is starting to embrace not as aggressive tariffs. I just felt that was enough to propel it into resistance and back into a breakout conversation. But is that enough to propel a bullish trend with multiple legs, talking about a breakout at against multiple time frame? That I'm not sure. All the news in the last couple of weeks makes sense to me to bring the market back up into resistance, improving conditions across the board in cyclical areas of the market, no doubt. But is it enough to get confident in just the structure of a trend, Mark? What's your thoughts on that?
I think it depends on what comes next. And, I think this week is going to have something to say about that. And let's talk about this week now, because it's a busy one. There's two things I think are necessary, because you always say, man, this is one of your favorite sayings. It's we're not trying to catch a trade, right? We can catch trades all the time.
Yeah,
we're trying to catch
the market's a trading environment. Yeah.
And we can catch trades all the time, right? I can get cash flow and all kinds of things, no matter how crappy or how good or how average the market is, right? But catching those trends where markets can be a little bit easier for a more prolonged period of time, that's where a lot of the money is made, right? Both down and up. Most of the time it's up, because bears tend to work.
Or you're not making aggressive decisions every 2 to 3 days. Yeah.
Yeah. And I think you need two things. One, I think you need the AI foundation, and I think you need mega cap earnings to help solidify that, right? Market can run
in conjunction with one another.
Markets can do all right with cyclicals leading. We've seen that at stretches, right? And there certainly can be great trades in that. For the market to run, we know tech needs to be involved for a market-wide trend to have legs, right?
For the market to have a growth trend, it has to have the growth areas of the market participate, yes.
It just does. It just does. And so we get those mega cap earnings. I'll pick your brain a little bit that. And I think you need an accommodative Fed. You cannot have a hostile Fed, the old saying, don't fight the Fed. You cannot have a hawkish, hostile Fed towards monetary policy for you to catch a trend. I think there's a long history in modern markets.
Don't fight the Fed.
Of that, right? And we're getting a little bit on both of those main trend type driving storylines this week. Let's start with earnings, right? You've mentioned that earnings have been decent so far. You're my earnings guy. I follow you. How decent have they been so far?
The backdrop of earnings season has been very, very good so far. You've had about 80% of companies beating the expectation, which is not abnormal this early in earnings season. I'd fully expect that to be around 76, 77% by the end of the season. And so this is not abnormal. EPS beats at that rate, pretty normal this early in the season, quite frankly. But one thing that is picking up a little bit here is the veracity of the beat. Over the last couple quarters, Mark, the blended growth rate has not improved that much from the start of earnings season to where we really kind of finished. In fact, the blended growth, and I'm just doing this off the top of my head, Mark, but the blended growth in the last 3-4 quarters has went from where we expected it. And typically you see about 6-7% increase in the blended growth throughout earnings season, because how earnings season works And yet we've only really kind of seen 3-4% average beats, and we've seen blended growth improve just slightly during earnings season, which has been a decent earnings season, but they haven't been great earnings season. This is setting up to be a great earnings season, quite frankly, because the blended growth is not just the EPS beat of 80%, but the blended growth is actually increasing quite a bit coming into big cap, mega cap, Max 7 type week over the next 2 weeks. We get all those Max 7 components sans NVIDIA, and that's where you see the biggest charge in blended growth. But coming into Max 7 week, you basically got an environment where you have set the stage to have the best earnings season in general, in sense, probably somewhere third, fourth quarter of 2021, 80% beat on the EPS, 62% beat on the revenue. EPS beat rate is right around mid sevens, which is better than it has been over the last 3 to 4 quarters. I would certainly give this a B plus A minus type of
That's the highest letter grade. If you haven't been following,
I'm very conservative on my
that is the highest. I cannot remember. Like
when last time you remember the banks hitting a triple.
I don't remember the last time you gave an A letter grade to earnings. Like you're oftentimes C plus, C, B minus,
and I'm judging the macro, right? I'm judging the fundamental side on that, and I've just felt like it's been a pretty good earnings season so far. But I will say this: you've had these starts to earnings season before in the last 3.5 years. The difference is I do think this one's been a little bit better than the previous editions. I mean, this is the first time we're going to eclipse double-digit growth in the last 3.5 years. And so it's setting up to be a very good one. But I want to be very clear on something. Blended growth, I anchor against blended growth on the macro side quite a bit here. And the blended growth has a tendency to radically shift around Amazon, Microsoft, Apple, Meta, Tesla, these massively important companies to the growth side of the equation. Because, Mark, in my estimation, this year is really about understanding the growth side of the equation. We're going into year 3 of the AI build out. You got the Trump administration that is focusing on growth over value, I would say at this point. They want to grow their way out of certain things. And so you got to be focusing on the growth metrics right now. And like I said, if this earnings season is going to go from a very, very good start to the earnings season that is a catalyst that creates a multi-leg trend, it's going to be on the backs not of the bank's earnings. It's going to be back on the backs of the Max 7 and what they say from a CapEx spending perspective, what they say from an R&D perspective, and quite frankly, how good of beats they actually do provide. I'm expecting them to come through fairly aggressively, quite frankly.
Yeah, and so as we follow that, we're going to talk a little bit about mega cap tech and AI here in a few minutes. And if they follow through, right, Trump plays nice with China, get these positive deregulation vibes. One missing piece of the puzzle for me, and that's going to be the Fed. Now, we know that they are not going to cut interest rates this coming meeting. They meet on Wednesday. They're not cutting. It's like 99.5%. We haven't gotten any Fed whispers. We know that part of the equation. They're not cutting. They're not cutting. But what does Powell signal? Because there is some debate out there about what the path of monetary policy is, Matt. And I know I've done so many shows with you over the years. When we don't know the path of policy, it can increase volatility, right? It can increase volatility. Now, before we went into the Fed blackout this week, Governor Waller, who is not known to be a super dove, who is kind of one of those Fed members who will lean on the hawkish side more than he won't, gave very, very dovish remarks. Basically said, listen, market, multiple rate cuts are coming this year. It's going to take something to disrupt this rate cutting train. It was interpreted very dovish. I think it had spooked the bears a little bit, and rightly so. If we get a similar message out of Powell, it's risk on for me. If you get the similar message out of Powell that, listen, I'm not going to fight that guy in the Oval Office. I'm not going to fight the president who's been openly talking about he wants lower interest rates.
2 to 3 cuts are in their dot plot. Why would he pick a fight with President Trump right now? It like that makes zero sense for Powell.
Nor does it make sense what we know about the man. And so, my base case coming into the Powell meeting is that I hear some version of the same Jay Powell I've been hearing for a long time, right? He'll throw out the measured language, right? That, hey, yeah, sure, right, data dependent, yeah, whatever. What does he say though in the thing? What are the cues? What's his tone? If it is rate cut supportive, we see multiple. If it is Waller, basically from a week and a half ago, if he delivers a Waller type message, market's going to like that. As long as earnings is supportive, you probably have the basis for new all-time highs and potentially a trend coming up here.
Well, they got the data this month to be a little bit more, what's the word? A little bit more laissez-faire when it comes to monetary policy.
Yes.
And I think that's kind of what they wanted the message they want to put out there, especially I don't think they want Trump's target on them right now. And so I think they're going to try to play kind and try to play nice, and they're going to paint a picture that is positive in my estimation. But Trump wants rate cuts. I mean, he gave a speech earlier this week where he's talking about, we're going to focus on trying to get oil down. They're trying to negotiate with Saudi Arabia and OPEC right now on the price of oil. And as oil goes down, President Trump believes that they should, be a little bit more aggressive on the rate cut cycle.
I think he said lots of them.
A little more aggressive on the rate cut cycle.
Lots of them.
Even in their dot plot, the Fed has cuts in their dot plot, 2 to 3 cuts in their dot plot. And in the last month, they got a PPI report that was basically pipeline inflation was not that big of a concern. It came in at 0.0. CPI report, there's still some concern on CPI report. There's no doubt about that, but there was a slight reprieve on the back of, say, a month ago CPI report. And so you got the fresh data, and the Fed is obviously data dependent, but the Fed does have data to support being a little bit more cautious here. Personally, I still think inflation is a concern. I'm
not trying to figure out 6 months from now, right? I'm trying to figure out the next wave of trades, which
they're not cutting this. Would you agree they're not cutting? Number one, that's baked in.
Yeah, that's baked in. We know that.
Right? Completely baked in. They're not cutting. And so the ultimate question is, how does he paint the future of policy, right? Yes. And they've been a little bit data dependent, a little bit dual mandate lately. I don't know. I think he focuses more on the growth side of it, but we'll see.
Yeah, and if he does, market's going to love that. If you get, and we give this little cluster of events on what, yeah.
Doesn't it just make sense for Powell to just embrace reducing the restrictive territory? Like, doesn't that make sense from a messaging perspective? In relationship to the president, doesn't it make sense for Powell just to embrace that type of message?
Yeah, that's his wussy get out.
The restrictive territory. We are not going to try to restrict growth in this environment. We're going to maybe don't use the word appease, but we're going to appease the president a little bit by our plan is to reduce restrictive this year. Mark, if they don't reduce restrictive this year, I don't think Powell keeps his job.
Powell's not keeping his job no matter what come next January, but I think that's when he's up. But I think I think that how this play out. Now, if for some reason Powell comes out and blah blah blahs it, I don't think that I would be really surprised. I think the market will be surprised too. That could cause some volatility. And
you better not blah blah blah. That he can't do that this week. He's going to have specific questions regarding President Trump. He won't be able to.
Yeah, so it's going to be very, very interesting.
Okay, so end of the day, does he bend the knee a little bit this week?
Oh, absolutely.
That's what we're really talking about, Mark. Does Powell slightly bend the knee this week to President?
I will be shocked if he doesn't.
Okay, me too. I'm on the
not surprised. I will be shocked if he doesn't.
I agree. I think he bends the knee a little bit.
And so if we get a high base, and here's the thing, if we get a high base coming into the Fed meeting, I believe Microsoft is Wednesday after the bell, Apple Thursday after the bell. I mean, we get this cluster of events this week. They're happening on that Wednesday afternoon through Thursday after the close, right? That's kind of where a bulk of the action comes, if I remember. Now we'll see if ASML reports earnings and blows up the market again like they did last time. I think they learned their lesson.
You could expect some volatility on Wednesday.
But you think about Wednesday, Powell,
ASML,
and then Tesla, Meta, Microsoft.
Yeah.
And then the next
don't
day,
sleep on I want you to understand the importance of just Wednesday, Mark. Just Wednesday. Not only do you have the central bank, right? But from an AI trade perspective, you have one of the number one catalyst stocks out there in ASML. They have been as much of a catalyst in recent history as any other stock in the AI space. You also have later on that day, so you get ASML in the morning. Then later on the day, you get Powell. Then right after that, you get Tesla, Meta, Microsoft, Lam Research, ServiceNow. Now, Tesla, Meta, Microsoft, IBM, Lam Research, ServiceNow. All of those are massive AI names. All of them are. All of them are. ServiceNow is a tier 2 AI gold rush stock. IBM they're not on the AI gold rush, but they do have Watson, which is big on the AI. Obviously, Microsoft, Meta, and Tesla are AI names. And so you have just an explosion of information that is coming into the market just simply on Wednesday. And then on Thursday, it's not as important on Thursday, but you get one of the biggest catalysts and one of the most important stocks in the entire marketplace on Apple on Thursday after the close. And so I do think Wednesday is the catalyst day. Like
yeah,
that to me,
I actually think Apple can lay an egg and the market be just fine.
Yeah. Well, we're going to be hearing from the market on Wednesday, and I doubt Apple bucks that trend. Whatever.
Exactly.
Yeah.
Yeah. You know,
Would you say Wednesday though is the catalyst?
Oh yeah. Like listen, that's what
kind of wrapping a bow on our market Skyline here, Mark. In the newsletter, I talked about and all the reasons why we're slightly overextended, why it's important for a little bit of secondary pattern. But it's really the anchors Wednesday this week on that secondary pattern. I was not talking about, hey, we need multi-weeks of consolidation. I was just talking about the forming of a short-term consolidation in a multiple time frame coming in front of some major catalyst on Wednesday and a little bit on Thursday.
Yeah, no. So break that down, and and how the Fed does and what it says obviously will impact things outside of equities. We'll talk about equities as we close out our podcast here in a few minutes with stocks in the news. But gold, silver, gold already feeling frisky. It's had a great week in the first week of Trump. Extended what was a nice technical setup. I was very curious. It was one of the asset classes. How's it going to react to Trump? Well, it had a good week. Right now, obviously, if the Fed delivers a dovish rate cuts or method, that is a good backdrop for gold, right? Because it just is. It's probably a backdrop for the dollar, and then
I don't see a bad backdrop for gold in the next few years. I'm not sure there is a bad backdrop for gold that could create. Let me put it like this. I don't think you could create a bad backdrop for gold given the debt cycle around the world right now. I just don't think you could create a negative theme based on that.
Yeah, no, and see if silver catches those and the dollar, which a Bank of Japan, because President Trump didn't call just for the United States to lower interest rates. He said, everybody, come on, let's have a cotton party.
Well, he's kind of explaining how the Bank of International Settlements works.
Have a cotton party. Well, Bank of Japan said no.
I know what he was trying to say, but that's exactly what they would do. Like they have to follow the U.S. The U.S. is the reserve of the world, so it would be interesting.
But Bank of Japan actually rose interest rates on Friday. I think that's going to help weigh on the dollar.
That's going to help the entire everything in the market that you like and has been going on. The Bank of Japan helped you this week.
Unless the carry trade part two resurfaces in the coming months and then blows everything up for a
That
couple
already
of
got
days.
blown up. It's not over leveraged as much.
Yeah, like they can't reapply
I
that
said
leverage really
it's not
quick.
as over leveraged is what I said. Is what I said. My thoughts on gold and silver here. I think three of the coaches of tackle had silver as one of their favorite picks coming into this week.
Two on the podcast included.
And the two here, yes. Silver has a chance here. It's been testing against that 28 level quite a bit. When you look at the futures on SI's testing up against a pretty good resistance level in its own right around that 32 level. And so silver's looking at a breakout here, no doubt about that. We're looking at a breakout of that 28 level on SLV. When you're looking at gold's just been in a little bit of a fading party. I haven't really seen it as a great directional instrument, but it's been a really good situation ever since it had that hammer candle off the 50-period moving average just recently. Now you're coming up into a little bit of overhead that could attract some sellers. I'll tell you, GDX looks pretty good here, though.
Yeah, it just does. It just does.
And gold's one of those things where I love gold, love it long term. It has a spot in everybody's portfolio, in my opinion. And if you do not have a gold position, this is a day that ends in Y, which means at tackle trading, it's a good day to start building a gold position. But when you're looking at it from a trader's perspective, don't you have to get a little bit intoxicated by the catch-up philosophy of GDX here?
You have to. It is because guess what? If gold does not go down,
GDX doesn't have to go up. Catch up.
Gold does not have to go up here like dramatically for gold miners to play some catch up.
Gold doesn't have to go up 1 inch from here for miners to play some catch up, especially, Mark, if XLB continues its deeper type of bearish retracement, a little bit of that 1, 2, 3 type reversal here. And so I like silver. I like gold coming from the 200-day moving average right now.
Yeah, listen, it is a fantastic cash flow backdrop in commodities, precious metals specifically. We'll see if some directional, let's say if Powell cooperates. I think he will. Will that also be the spark? Positive news flow continues in Bitcoin. Haven't got that executive order. We're going to announce a reserve, but laid some of the foundation through some executive orders this week, the appointment of individuals, working your way there.
Do you think that executive order on Bitcoin reserve is coming?
I do.
He laid the foundation this week. He put an executive order regarding the elimination of any digital cryptocurrency out of the central bank. I don't know. Why hasn't he announced it yet then?
Well, I mean, it's been a busy week. Boy's been traveling around the world, doing a lot of stuff, and
Okay, just can I play a little bit of contrarian here?
Well, we'll do. That's
been a busy week with hundreds of executive orders, and we didn't get a reserve out of Bitcoin out of that.
Listen, and there was some volatility on intraday charts over the last week because of that, right? It is not lost in the crypto universe. Read a lot of crypto blogs being like, does he not love us as much? I mean, there's
of course he loves crypto. He's made.
But no, does he not love us as much? Right? It's it's all relative.
They all want it every single day. They want the love every single day. I've been reading some chatter that there is some big time fighting against a crypto reserve. Internally in the government. And so that's why I asked the questions, because I know Trump wants it. And if Trump wants it, he's going to announce it. Like that's end of story. It's not a debate. But if there is truly a debate on a crypto reserve and it doesn't happen, let me ask it like this. If there isn't the tailwind of the announcement of the crypto reserve, did the front running post-election, did it go too far, too fast?
Most likely, yes. That is, I believe, the fuel. I mean, because deregulation is nice. You got to put it in perspective of the percentage of the move. When you have a major asset class that makes a massive percentage of the move, and 70 to 110 is
it's a massive move.
It's a massive move, right? And if you don't you're going to have some digestion. Now, the deregulation, the positive vibes, that's all great, but a lot of the just genuine, oh my gosh, froth out of the mouth was, government's going to be a buyer, supply demand arguments, let's try to front run that. That doesn't come to pass. Bitcoin's going to take a decline. It just is, and it's going to work out its demons, right? And eventually, left to right on the chart, it's going to go up. But that's a big move that it tried to, that. No, I think it is coming. I think it is. If it doesn't, and if there is more of that talk, and if there becomes those seeds of doubts, right? Well, probably looking at a correction before the next major move up.
Yeah, I find it very difficult for Bitcoin to catch some momentum here without some more tailwinds.
Yeah, and so
I bet it's got a good little development though coming into a multiple time frame. I mean, if they get any sniff of that announcement coming, you could see a breakout here, and it's I actually think it looks better on iBit. You got this little box up here at the top, high base, 9 EMA catching up, kissing up that multiple time frame. I think a resistance, I think a breakout plays here. I do. I think it's had decent development over the last week. But would love a little bit of reserve announcement on the Bitcoin side.
Yeah, absolutely. Let's talk some AI in our stocks in the news to close off the podcast. Stocks in the news, some interesting stuff is going to continue. I mean, this is a great macro micro environment. It's just a really interesting one. Let's talk Stargate. Let's talk Stargate. You had an AI Gold Rush webinar this week. You can catch that replay of that. Send me a nice email, Team at Tackle Trading. I'll send you the replay. It was a fantastic webinar. Stargate, though, in the midst of this very busy week, what a great name, Stargate was announced. And tell us what Stargate is, Matt, before we get too deep into the analysis on
it. President Trump announced Stargate earlier this week in conjunction with a few different tech companies. Oracle, OpenAI was there, a couple others was there as well. SoftBank's kind of one of the funding as well, but basically what Stargate is it was the announcement of a $500 billion investment into the AI infrastructure, which is all data centers and server farms and so on and so forth. This is what drives the AI trade right now. It's CapEx spending, it's private investment, it's R&D, it's everything on that side of the equation. And so when you're looking at, say, for example, CapEx spending that was expected to come out of the S&P 500 this year, for example, Meta just announced that they were going to do 65 billion instead of 60 billion this year in CapEx spending. You saw that same news come out a few weeks ago on Microsoft and so on and so forth. All of the Mag 7 companies are doing this. They're spending billions and billions and billions and billions of dollars in CapEx spending, building out the infrastructure, the digital infrastructure for the AI infrastructure build out. What Stargate is it's in conjunction with all of that, all of this other investment that is happening out of the largest companies in our world on the AI build out, because there's a race going on. Who's going to win that race to AGI? Quite frankly, I think that's what the real race is. There's a couple important companies that are kind of leading the charge in that race. But out of Stargate, it was really kind of Oracle, OpenAI out of Sam Altman and whatnot that pledged up to 500 billion. Now, Elon Musk, who is also firmly entrenched in the AI conversation with Tesla and everything they're doing with Twitter's AI or X's AI, and then obviously the FSD out of Tesla. Elon Musk came out and said that they didn't have the funding for that, which sparked a whole secondary conversation between the tech bros and President Trump and Elon Musk and Sam Altman. And it was fascinating theater. But at the end of the day, Sam Altman and Elon Musk have been in competition with one another for years on this project. They don't necessarily like one another either, but it doesn't change the net result for the marketplace. More money coming into the AI infrastructure build out. One of the fuels of the fire of the engine of the AI trade is CapEx spending. Yeah, and that's what this is. It is the pledge of this private investment of up to $500 billion to build out the server farms, the data centers, the energy projects that is needed to energize the AI, not the AI trade, but the AI technology in general. It was big news coming out of Oracle and OpenAI, and obviously President Trump and the Trump administration is kind of leading the charge on Stargate.
Yeah, no, and this,
I do wonder why Elon was not part of Stargate. I do wonder that.
Because what you answered your own question. He doesn't like Sam.
I know why. I wonder out loud though.
You know, him and Sam aren't holding hands.
They don't like each
these
other.
days.
They don't like each other. If you're fascinated by tech bro, sci-fi, AI, futuristic cat fights, Sam Altman and Elon have a great one right now.
Now, make no mistake, we are in an AI war. We've been in a technology war with China for many, many years now. And, you know, my next stock story ties into Stargate and the importance of it. You know, using NVIDIA as the ticker symbol, I could choose other ones to talk about it, but I want to talk about this new DeepSeek model coming out of China. Now, Microsoft CEO Satya Nadella was at the Economic Forum in Davos in Switzerland on Wednesday. And he said, to see the DeepSeek new model is super impressive in terms of both how they have really effectively done an open source model, referring to China, how they, you know, and he says, we should take the developments out of China very, and he used two veries, very, very seriously. Very, very seriously. What's your thoughts on DeepSeek? When I say you're my AI guy, you know, I am the Holiday Inn AI traveler, right? Yeah. Like I hear a little bit of information and maybe I can sound smart because you know, stayed at a Holiday Inn last night. But, you know, you have emphasized how we need to beat China in this. What's your take on this DeepSeek news?
I think it's vitally important that we beat China in the AI race. I think it's the most important macro race that is happening from an economic, technological perspective. I think it's the most important Cold War we've had because Cold Wars happen quite a bit, but I think it's one of the most important Cold Wars we've had in a long time, quite frankly. DeepSeek, there's nobody that is in front of what OpenAI and NVIDIA are doing right now. China is not in front of America right now on the AI infrastructure build out, specifically on the infrastructure side of the equation. We can talk about the technology and the advantage, the technological side of it, but I still think there's a massive open question on the infrastructure side of China versus the United States. And that's why I think the announcement of Stargate and what all these companies are doing from a CapEx spending on the infrastructure side of it is going to pay just trillions of dollars worth of dividends down the road.
You build the infrastructure and the rest will follow suit.
Infrastructure, it doesn't matter what technology you have, honestly, you got to feed it. And so I would say right now, Mark, from a technological perspective only, the differences between, like, say, ChatGPT which is probably the most advanced AI technology out there right now, is what OpenAI and ChatGPT is doing. And so when you look at what they're doing in comparison to what DeepSeek is doing, I would say they're comparable from a technological perspective. I would agree with the Google CEO regarding the quality and the improvements that they have made over the course of the last year. However, I would suggest that Twitter needs to take a step back on declaring China winning this war to AGI, though.
I hadn't even caught that side of it. Social media has been all aflutter about it.
Yeah, a little bit, not a lot, but
you mean Twitter sensationalizing something?
Yes, shocking, I know. But I would just say that from a technological perspective, yes, they are close to OpenAI, what Sam Altman is doing there. They are close. There's no doubt about that. I would say we are slightly closer to AGI than they are. I do think that. And quite frankly, I think OpenAI is going to be the company that breaks through on AGI. But again, even if they're remotely close on the technological side of the equation, there still is that ultimate end-all be-all important equation of the infrastructure and the ability to feed the AI engine. And I just, Mark, we're still talking about China being coal being the primary energy source out of China. That's not going to get the job done to feed the AI energy. So I just don't see them being close on the infrastructure side. that's why I just think the build out here is so important that Microsoft and Apple and Google are doing the announcement of Stargate. I just think that is so vitally important because we can't just keep our eye on, oh my God, win the race to AGI, win the race to AGI, win the race to AGI. We can't just focus on that. We have to focus on 20 years from now too, because 20 years from now is going to happen. And if we don't build out the AI infrastructure and the framework appropriately, we're just going to run into the same problems with our AI infrastructure grid, the same way we're running into our energy grid right now. And so we got to think it futuristic. I love the announcements because of that. And so I would say they're close on the technological side, but they're not close on the infrastructure side.
That's great analysis. I hadn't even thought about it from those terms. And we've seen the Stargate thing, but we've also seen, private companies, talk about the securing of power, thinking ahead in terms of 10, 15, 20 years.
Well, it went from about 180 to 240 in the last 2 years. Now you're talking 300 billion in capex spending this year. Yet on top of that, Stargate. This is a conversation that the United States government and corporations in the U.S. are taking extremely seriously. And that's honestly the only thing I ask for, is that the government officials and the powers that be take this conversation with the seriousness that it deserves. And this is the seriousness it deserves. We cannot lose the AI race to China. It cannot happen. And it does not matter what we do. You want to throw billions and billions and billions and billions of dollars at the problem? I'm good with that. You couldn't tell me a number I wouldn't agree with, because that's how important it is for us to win this AI race.
Yeah, listen, fascinating stuff. Listen, and this is also highlights the importance of the tech, just from a thematic standpoint. Coming out this week, market reaction, and then the narrative reaction, coming out of all of those big tech, Microsoft, Meta, on Wednesday.
I think Wednesday is the catalyst day for the entire earnings season.
Yeah, it's a big one. It's gonna be a fun week. It's gonna be a fun week.
Be a way fun week.
In the midst of these, very, very important, AI stories, Discover made my list of stocks in the news. Finance has had just a solid earnings season, solid price action. Just not a lot to say other than this is ever since the election, it is the sector of the cyclicals that sold off the least. It is the one breaking out the soonest. A lot of positive vibes coming out of the financial sector. What did you think of Discover and finance in general?
Oh, finance had an amazing earnings season. Discover had one of the better in finance, quite frankly. You would have had a much bigger move this week on Discover based on the earnings that came out if it wasn't front run based on the first week of finance being really, really good. Discover came out, and mind you, finance in general has a 49% blended growth rate right now. Like, it's historical right now with what finance is doing. Discover, not blended growth, but EPS does play a role in blended growth. Discover had a 61% beat against EPS this week, Mark. 9.3% year over year increase in revenue. Just a rock star of a raw report this week coming out of the EPS and the revenue handle of Discover. And finance in general has been a winner over the course of the kickstart earnings season.
Yeah, and Netflix is my next, just because it's Netflix, and there have been times where Netflix gave you the vibes of the market, right? Mm-hmm. Where it doesn't happen every quarter, but there have been times where we've been like, Netflix has an earnings report, and you kind of get the vibes, and I think that occurred this week as well, because you didn't love when you were doing the tackle today. You're like, yeah, this earnings report, okay, right? Like, yeah, but I think you got the vibe of the market. Right.
Well, it definitely showed you the vibe, but I still maintain what I said that day. I don't believe this was a great report out of Netflix. I do believe that the secondary analysis out of the report out of Netflix was strong, i.e. 300 million subscribers being a headline number achieved was really, really, really strong. The ad tier supporting was really good. You also had awesome launches of the NFL, of the Mike Tyson fight. They're Netflix getting in.
They're doing some good things as a company.
A winner, like I love that. I love the secondary stories that are coming along with Netflix, but that's not going to change the fact when I'm looking at Netflix here today, and they come in with a slight beat and a miss on revenue. And so it was a really good report when you're talking about the context of everything that is around Netflix, a little bit of hopium for the future. But I didn't feel this report was a good report coming out of Netflix from a raw numbers perspective. How much money you're making, what your revenues handle doing, what are you doing from rewarding the investor class? I didn't feel this was a good report out of Netflix. Personally, I think we're going to see a gap fill.
You know, and vibes are so important to me. You know, so
if Netflix breaks 1,000 on this report, it tells you everything you need to know about the frogginess of the market, because this report,
market down. That is the first time I've heard Matt use the term froggy. I've been trying to insert froggy into the market dialogue at Tackle Trading for a long time. Froggy is a term I use to describe when the market is feeling hoppy, right? Where it's feeling like
it doesn't care about anything.
It just wants to jump, right? It's just like, let's just jump. Let's just
Marty
jump.
the elephant just having fun on the trampoline. But again, I look at Netflix here and I'm like, okay, average earnings report. You're talking about a company that went up 20% in the quarter and then went up another 15% on their earnings announcement. That was a average beat. Their EPS last quarter was $5.4. They were at $700. The EPS this quarter is $4.27, and they're at $1,000. Make it make sense other than hopium for the future. And so if Netflix high base, and it could, technically I would call for a high base here. If it high base breaks out of 1,000, it tells you what you need to know about the market.
Yeah, it surely does. Listen, my last one, ISRG, which is, if I remember my list from the AI Gold webinar, the lone healthcare tier 3 company, only healthcare company on the AI watch list that you have right now.
It is the only healthcare company I have on the AI watch list right now, but it's a good one. There's no doubt. Revenues up. They had a really good earnings season, 25% beat on EPS, 25% year-over-year growth. The gap down on earnings on Friday is completely understood and warranted given the fact that you were front run going into the earnings. I look at this as a pullback situation. I like ISRG.
Yeah, listen, lots going on, Matt. I've really enjoyed the podcast with you. It's going to be a busy week. You certainly want to tune in. Tackle Today this week, our pro membership. Master Trader, do not forget about that if you're a pro member. And if you're not a pro member, seriously, genuinely a great time to sign up. You get to attend that Master Trader event. But Matt, send us out. Enjoy the podcast.
Yeah, Master Trader on Monday and Tuesday. Hit the link in the description below if you want to sign up for a free trial membership at Tackle Trading and attend that Master Trader course. It's going to be a fun, educational event. You're going to learn a tremendous amount. And if you love the podcast, best way to support the podcast, give us a nice little like and share and tell a friend about it. Help us increase the visibility of the Trading Justice podcast to other people near you. So I hope everybody has a wonderful, wonderful and blessed week.
Have a great week, everyone.